Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. As you can see, actually, why don't we just check and see? Yay, YouTube page is working. As you can see from the screen, this is quite an uppy market. I suppose you could argue heading into this monster celestial event only makes sense. Use the information as you can. Maybe don't get sucked too much into the FOMO. Understand that usually there's a year or so following whatever the climactic event date is that we end up sort of cleaning up. And I've been in this crypto space now since late 2013, if you will. So now I've seen at least 2 or 3 of these big cleanups. I don't think this is a big cleanup. But what I kind of would hearken this to is, I don't know. I mean, it seems a lot of people in the public think this is more like 2016. I still think this is more like late 2015 comparison-wise. And the following year, the space kind of went sideways for quite a while. And interestingly enough, if even if Bitcoin can just go sideways for a year or so, that does leave the window of opportunity open for those little junior ones to start firming back up again. It is middle of November. So we're not quite into year end yet. Political situation, from what I understand, down in the United States could basically stay in limbo here for the better part of a month. We also have to get through sort of Black Friday event, which often is a short-term sort of boost to stock prices and general euphoria and enthusiasm. And of course, the stock market is nothing more than just a reflection of how people are feeling. So kind of thinking we had like a TRI secret options formula meeting last night. And we were kicking around the idea. One of our sort of longtime members really likes the idea of sort of a pivot. His around the end of the first week or so of December. And actually, interestingly enough, there was a famous speech put out by Alan Greenspan, the chairman of the U.S. Federal Reserve Board from back in my sort of youth in the market, in which he called, in that particular year, there was a very substantial stock market rally in late November. And he called the market irrationally exuberant. I have a feeling heading into Jupiter-Saturn conjuncts, which really only happen, especially these fear cycles, only about once every 40 years, we are going to see an extreme amount of irrationality. And my hunch is from the Bitcoin community, especially the, what the hell's the term? Kevin would know this term. Maximalists? I think that's the term. I have a feeling we are going to see quite a bit of exuberance out of them. So get ready for it. Also, too, I get the feeling that the COVID crisis is now almost now going to be considered an afterthought in asset price. What's the word you would look for? At any given point in time in the marketplace, people are in there sort of trying to determine what value is. And somebody who buys something figures that there's value at that price. Price discovery. That's what I was looking for. So, what your perception of value is you're just gonna have to leave that up to yourself, right? Whatever metrics you use to determine value. My hunch is in a world where we could have quite a bit of sort of, the U.S. currency is collapsing. How the hell do you figure out what value is? I mean, technically, that's almost like in a vacuum. We don't know what value is. And in those kind of environments, oh boy, you can have prices move around dramatically. And, for historical reference, and I kind of think that the introduction of commodities investing was very similar to the introduction of cryptocurrency investing this cycle. But the commodities investing, buying commodity futures, buying commodity options, buying gold futures, famous movies like Trading Places, which was filmed in the early 1980s, following that big gold market and commodity market bull market. I think the similarities this go round are the cryptocurrency market. And, what's so sad is to see what's happening to gold through this. You actually look at gold stocks themselves on longer term basis, and I'm like, holy crap, these aren't a buy. These are actually a sell. And gold, Jesus, having an awfully hard time here. So it's beautiful for the millennial generation to see their sort of perception that gold is, okay boomer type asset. Not really interested in it. That was last generation. I want our generation's proxy of how the hell I'm going to get the hell out of the currency fiat world. Again, and always, we have to ask ourselves, are we buying value? So understand that just because people are opting out of the fiat currency world and the emotional state of people might dictate, hey, panic, just FOMO. I don't want to be left behind, but does that really actually equate to value? I even tried to explain that to I think it was somebody rather famous that I tried to send a Twitter stream to. He put an open question out to the public, and I was like, well, give me the opportunity to answer, I'll answer. Trying to explain, keep in mind, I've been at this game for a while, and I don't even know where the hell this video is going to go today. Where the hell's the link? If I go into my library, then I should be able to pull up the Twitter page there, over here. So I spent a long time replying to this. I think this was Peter Schiff. I'm not quite sure if I have it correct here or not. I don't know where the hell it was. I thought it was down in here somewhere. Actually, maybe it's under these tweets and replies and all this. So I actually tried to spend, I invested some time and effort and really thought about my response to this gentleman. Right here. It took me 9 replies in this amount of characters to actually explain what I think is going on with this Bitcoin story. Ray Dalio. So it was Ray Dalio. He put out just a post saying, here's my thoughts on Bitcoin, and I'd appreciate your input. And so I was like, okay, fine. I'll give you my input. I'll tell you exactly what I think. So I think there's a bunch of things that are going on here. Like I just said there a moment ago, I think this is, I do find it fascinating, the correlation between the introduction of commodities trading and commodities investing through the 1970s and the correlation between the introduction to cryptocurrencies and cryptocurrency trading from about 2010 onward. I mean, hell, everybody remembers Mint Pal and Mount Gox and Crapsy. I mean, those were all stories from the early part of the decade. So I think there is an astounding correlation to this, which I'm actually a bit surprised we don't hear about more in our society. I've spoken about this at length. I do believe that there is a demographic cycle shift going on here, and it's very normal. And this is a big time of uncertainty, right? What's going to happen? What's going to happen? And in times of uncertainty, you get a lot of price volatility. So, ironically enough, what we're seeing around stock market gyrations, both down and up, actually is pretty normal around these generational handoffs. I do find it interesting that basically, I might argue over the past 10, 15 years, politics has actually stopped. And politicians don't really do their job anymore, which I do find fascinating. And the actual job of managing the economy has actually been downloaded to the bankers, which is sad because the bankers, they live in a world of interest. Interest is their profit margin. If they can charge more interest than the rate of inflation or the depreciation of the purchasing power of the currency, then they win. Obviously, we're in an interesting situation. I don't find it a coincidence at all that we have this crisis, and all the bankers have said, don't make your payments right now. No big deal. Just defer them, put them off, because they know that the interest rate cycle will turn, and you're going to have to make those payments at much higher rates down the road. I mean, there's no way you're going to. And what's worse, of course, is that, there's probably going to be little penalties and little fees and all that kind of stuff, which makes the debt more. So it's actually in the banking system's best interest to create some sort of crisis to make sure the public doesn't pay back their debt at these low interest rates. So I do find it interesting. And, the long and short of it is this millennial generation, there's some really smart people in this space. And I don't think they buy the bullshit. If you just do what you're told, we are going to live in a world of Japanification. And sadly, this is one maybe function of, your sort of relative freedom. Keep in mind, pre-1945, in Japan, if you even looked at a samurai warrior the wrong way, he had the right to murder you in the streets right there, right in front of everybody in the public. So I think that the Japanese society, the Japanese themselves, are learning how to be free. So I don't know whether the public, they have enough oomph in Japan to really stand up to the bankers. Because keep in mind, after the Second World War, basically the bankers that run the United States and probably a lot of the European central banks, they set themselves up in Japan as well. I mean, what a surprise. But, us, Doritos eating, Super Mario Brothers playing Westerners, we bark and we complain. And if we see something we don't like, well, we opt out. And I think Bitcoin is your opt out. And it doesn't surprise me. I mean, hell, that's the reason why I got into this space. I knew it. I could see the writings on the wall. And I literally left the entire financial services industry, just walked away and wrapped my arms around crypto. What a crazy idiot I am for that. Anyway. Ironically enough, if you actually look at the mechanism of quote-unquote money, I think you can actually make a very realistic argument that the algorithm that Bitcoin is built around and the consensus model, and I love this phrase, the process of remunerating validation of the system, because that phrase right there is the key to why Bitcoin works, is that people validate that you're not cheating and they get paid for validating the not cheating. It also, to a certain degree, is a little bit of the vulnerability of Bitcoin, because if you can obviously take over the network, you can create what reality is. So that's Bitcoin's Achilles heel, 51% attack kind of conversation. But in a world where things are highly politically charged and people's jobs and livelihoods and careers could be put in jeopardy if one did not do what, say, a boisterous politician insisted that you do, could, which is very non-algorithmic, it's very human emotional based, could it alter the money printing, let's say, dogma, what should happen in good economics? Absolutely. And I think that's exactly what has happened. Every single politician does not want to be the next Herbert Hoover. Ironically enough, if the economy acts the way it should, there should be a Herbert Hoover every 40 years. They have no choice. It is the way cycles work. So they've got to pull off some sort of fraud, some sort of fugazi, some sort of sham to try and make sure that they are not the next Herbert Hoover. And every single guy, whether it be Tricky Dick, or whether it be, sadly, and it looks like it's George Bush, Barack Obama, and Donald Trump, I think they're all going to be smooshed in there in this QE world. They pulled off this fugazi. So, and now I suppose, I don't know who's next in line here. So in that kind of environment, what's actually more trustworthy? I hate to say it, but I'd much rather trust Bitcoin than some Federal Reserve governor who takes marching orders from a democratically elected politician who's not really going to be working in my best interest. So that's the sad part about all this is, frankly speaking, I think Bitcoin's far more trustworthy than any fiat system. This is unfortunately now where we get into the tinfoil hat kind of conversation. I believe that the institutions, the people that run this sort of world financial system, they fully understand what's going on here with Bitcoin and cryptocurrencies. They understand the opting out, and they are trying to do everything to get in front of this thing. And then also, too, to create an environment where, say, Main Street can't even really contemplate using this asset. Which is ironic for all the crypto enthusiasts, because you all want Moon, but unfortunately Moon implies volatility, which implies Main Street can't use this thing to actually do business. And trust me, I've tried to run a business just accepting Bitcoin as payment, and you can't do it because you just don't have a consistent revenue stream. So, ironically enough, I think that the institutions know this. They know the fact that crypto's the future. They also know that this whole fiat system is an arcane dinosaur and it's basically limping along. And one of these days it's going to break. So if they can actually get ahead of it and actually create the narrative around this, then I think there's actually worlds of opportunity for them. Rothschilds themselves publicly came out and disclosed that they bought and invested in Grayscale at about $1,000, $2,000 US a Bitcoin. And that was following the breakout to all-time highs from there back in 2016, 2017. So, from a technical analysis perspective, it made sense. They had to wait for the big longer-term breakout to confirm the weekly W's and all that kind of stuff, monthly W's, quarterly W's. I mean, they do the same shit that I try to teach all of you guys. It's no different. And you could see them coming in. I mean, it was a beautiful breakout. And, of course, rah, 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 what a hell of a rally. Went zipping all the way up to 20 G's. But the problem with that, again, like I said, because the space is unregulated, do you think that maybe some of the Rothschild type people built cushions? Maybe let's bump this thing up a little bit. They maybe buy at 1,000 or 2,000, let a little bit go at 20,000. Who knows? Buy some more back. And then, of course, because they have that wonderful inventory from about $2,000, I mean, that's basically their base price. And I think that, Goldman Sachs came out with a whole bunch of recommendations around that level as well. So I think there was a big vested interest just to make sure Bitcoin doesn't go back down below those levels, because they didn't want those people to ever see their accounts negative. That created just a massive playground, 2,000 or so on the downside, 20 G's on the upside. And you guys over the past 2 years just went through us simply just trading that range all the way down and all the way back up. The only problem with that is, this unregulated space. Do you think Wall Street and Rothschilds and whoever the hell you want to throw in their 1%, do you think they're going to take advantage of this unregulatedness to manipulate this market a little bit? To do some nefarious activities that they would not legally be able to get away with in other markets? You tell me. Also, too, does this help them in a world that's really low interest rates to pad their profit margins just to make damn sure they can keep paying dividends and all that kind of crap? I think they're actually pretty motivated to take advantage of this price volatility, frankly. I'm also worried that we have a situation here where, and I don't even think I actually talked about this. Well, I did down here. I'm worried that we have a catalyst now from a tax perspective for January 1st. So from a capital gains perspective, there's a lot of motivation to, number one, get the price as high as possible before that January 1st date, and then number two, do a bit of selling. Now, if you're an institutional player, how the hell do you sell in size? I need to get 1 million Bitcoins off the books. Well, you got to juice the public. You got to encourage them to come in and think that Bitcoin's a really good investment here. I'm a little bit worried there's a bit of a trap being laid here. Now, that doesn't mean that this is the top, tomorrow's the top. Remember, December 21st is December 21st. That's like a month and a half away. And we got all these crazy, Black Friday. Is there going to be a pump through that? And then, who might say something around that December 8th, which could cause trouble. So, I mean, there's going to be lots of volatility from here to December 21st. But I do find it interesting that that's the sort of celestial catalyst. I think the whole damn market is going to melt up into that. They'll call it the Santa Claus rally, whatever, COVID relief. My vaccine's now 95. No, mine's 96. Mine's 90. Somebody's going to hit 100% one of these days. And then we're just going to say, okay, everybody get your vaccine, and that's basically 2020 story. So what I'm just worried about here is it just feels like there's a very convenient pump going on right now. And if you can't see it in the price action, I mean, just pull up a chart. It's straight up. So, do you want to get sucked into all this? Okay, that's entirely up to you. I do think that there are some motivators going on here, both tax reasons why and as well political. If you look the day after Mr. Trump was elected, Bitcoin basically went straight up from that day. So could that be a little bit maybe political football? Maybe they want to get out since they're not going to be in power. I don't know. So there is a lot of that kind of stuff I find floating around. So how the hell do you sort of, separate the wheat from the chaff? I think, and what I like about this approach is, look, and I'm not telling you whether Bitcoin's good or bad. I'm just talking about you're spending your hard-earned money, and I had to teach a program there where a lot of people that joined the program prior had bought Bitcoin at $15,000, $16,000, $17,000, $18,000, $19,000. And they had to sit there for 2 years watching it go all the way back down to 3,000. That's what I'm trying to help you with here. So I don't know where the exact top is here, but 9 times out of 10, these things usually correct back down to reload zones. I like the idea that if you actually want to think about what a base price for this commodity is, go look up average cost of production. Try and figure out what this sort of the typical sort of mining rig operation is running. and what is their cost. And if the margins are really, really, really wide like they are now, what does that say about these mining companies' profit margins? Are they going to be showing maybe increased profits going forward? So that's another way you can maybe consider taking advantage of this. And then finally, my attitude is, if the margins get so crazy wide, maybe just go out and buy a rig and start mining. I mean, hell, if you can mine a Bitcoin less than 10 G's, that's a nice easy profit, isn't it? So there's those kind of considerations. That's my response to Mr. Dalio. I don't know whether that helps. It's kind of an interesting daily brief recap that I did here today. I don't know why I did it, but I hope you enjoyed that. Some food for thought. Always interested in your comments. I'd be curious to see if you had anything significant here to add to this. But on balance, if somebody was going to ask me what I saw, what I think about this Bitcoin story and what I see going on right now, I think that pretty much summarizes it. So, all right, everybody, won't get too much into levels. I mean, I don't really see anything specific to do off of the stuff that we talk about. So I'll see you all on Friday, and then, of course, we'll have a lot of fun doing the Broiler Chicken Show on Sunday. All right, everybody, all the best, and bye.